Let's review Alibaba's stock today, looking at its financial indicators. I'll also show you the options chain. We'll analyze the 3D volatility. I'll definitely show you the volatility. What's happening here? Look at the volatility. And let's also consider interesting strategies. Let's see what the market predicts for this company. I'll tell you right away that the market is leaning towards a decline. These stocks are rather risky. As usual, I'll show you a strategy to profit from. Where is the stock headed? As we can see, there is a lot of profit potential if the stock sharply rises or falls, but we'll get back to that later. Let's start with the very beginning of Alibaba's stock. What does it do? I want to warn you right away that it's a Chinese company. And there are, of course, risks involved, which I must mention first. One risk is trading on American platforms. There have been many rumors about the risks of this company. We also have political risks, because this company isn't very well liked in the US, and there could be pressure from the US. Overall, there are risks from both the Chinese side and the US side. It's a very unpleasant situation. Let's quickly look at its fundamental indicators. Actually, the situation here is very good. Profit growth, revenue growth, yes, for 2022, and for 2023, the company did dip slightly. But in any case, it has very, very large profits, significant net income, and substantial revenue. Let's look at its financial indicators. Also, this company has a market capitalization of $165 billion with revenue of $130 billion. So basically, in a year, the company's revenue can match its market capitalization. It also has very large net income. The company has only recently started paying dividends. 1% for such a company is quite significant. Margins are decent enough. Overall, the company's financial indicators are quite good. Also, we see that all analysts, all banks predict price growth. So why is the company still falling for a very long time and is now practically at its minimum values? Let's switch to volatility. The first volatility in the company is quite high, around 40%. Yes, some expirations are less volatile, mostly near-term ones, but the distant ones are very volatile. This will help us in formulating a sound strategic position in the future. Let's take a look at the smile and volatility. In general, this situation is normal because investors and traders hedge their stocks by buying put options, and because of this, volatility is increasing. Also, let's look at the historical and implied volatility. What's happening here? The white line is implied volatility, the gray line is historical volatility, and at the moment, implied volatility is above its historical values, which allow us to benefit from this. How to benefit from this? You see, I always say that you need to focus not on movement stock, but on movement of volatility. That is, you can profit from an increase in volatility or a decrease in volatility. But to profit from this, naturally, you need to use options and derivatives. Let me show you right away how to do it. We here enter the ticker Alibaba, also specify volatility and, for example, a decrease in volatility by 20%. And as we can see, artificial intelligence helps us develop automatic strategies. Some of these strategies are seemingly risk-free. In fact, naturally, they are not. And what are we offered here? We are offered to sell 2 options. And $70, we've noticed for a long time, the stock has been moving from $70 to $75. Naturally, this is related to such a large volume in options. Again, there were moments when the stock rose above these levels. There were also moments when the stock fell below. But on average, the range is like this. We will definitely need to keep an eye on this, where options will be headed next. Let's also immediately take a look at the 3D volatility. Here we have all dates included, expirations, all volatility, all strikes. You can immediately determine what strategy can be opened here. We'll return to the strategy a little later. But first, I want to show you what the market predicts. Again, here we have a forecast based on derivatives, based on options. It's not me saying it, yes, the market forecasts. And at the moment, the market indicates that the stock will be priced between $65 and $70 in about 30%, meaning that there's a 30% probability will be in the range of $65 to $70 in this range. This suggests that the market is more inclined towards a price decrease than an increase because the range from 70 to 75% is only 23%. But again, the market is always more nuanced, more subtle in looking at stocks. But I also want to draw your attention to this. Now, I want to remind you of my philosophy on trading. First, I don't know where the stock will go. I don't know how to predict price movement. And anyone who claims to know where stocks are headed is probably lying to you. I base my analysis on mathematical expectation, on mathematical portfolio management, on probability theory, meaning that if you construct your portfolio correctly, you will profit. How to do it? Well, I immediately show the strategy that I have built, and as we can see, if the stock is expected to fall significantly, we make money. If the stock, for example, rises to $125, we can earn almost $15,000. Of course, that's a significant amount. Also, if the price stays in the range of $60 to $75, we don't lose anything. We have a small drawdown around $45 and around $90. That's where we can incur the biggest loss. But again, never follow me blindly. This is purely to show how positions can be managed because the position is very complex. It needs to be combined because this loss can also be offset by additional strategy openings. At the right moment, you need to sell options, you need to buy options, you need to manage this position. I showed it purely logically, that is how trading can be done. and it doesn't matter where the stock is projected to go. I always say, if you learn to construct your portfolio properly, you won't care where the stock goes, whether it goes up or down. You'll profit from volatility movements. From the movement of the asset itself, it's very interesting. I advise all of you to study options, derivatives, as well as mathematical analysis and probability theory. It will greatly help. Also, in the future, I will definitely be recording educational videos on how I manage positions, what might happen, and so on. But everyone's main question is why the stock has fallen so sharply and has been at its historical lows for almost 4 years, dropping to $55 to be precise, even $60 where our historical values were. And now the price, yes, is even below its IPO. What's the reason for this? Of course, it's been exactly 10 years since this company went public, and the company has certainly grown significantly. What potential for profit could there be? I actually suppose it's related to risks, including geopolitical risks. I've already mentioned that there are risks both on the China side and on the United States side. The company could be delisted from the stock exchange, and the Chinese government could impose more sanctions on this company. Also, a well-known investor, Charles Mander, was buying this company. Of course, he's already passed away. We won't know anymore what he hoped for and whether his investment yielded the desired results. But the most important thing is for this result to justify your investment. Again, I'll tell you straight away at the moment. I don't buy this stock because, again, the risks are too high. In my opinion, it can be purchased, but under certain conditions. If you still want to invest in this company, I would advise you to do it through Hong Kong. That is, open a brokerage account in Hong Kong and buy this stock there using Hong Kong dollars. Yes, there's still a small risk. The risk from China doesn't disappear anywhere, but it will be much, much safer. That's my opinion. So my advice, if you want to invest in European stocks, you need to open a brokerage account in Europe. If you want to invest in Indian stocks, you need to open a brokerage account in India. Again, this is solely for safety. That's my opinion. You may disagree with this, but personally, that's how I always do it. Again, if you buy this stock in Hong Kong, the situation is much simpler. You can hold it and not worry about the risks associated with delisting. Although, in the event of delisting being excluded from trading in America, the stock could certainly drop significantly, mainly during position closures. After this dip, I still believe the stock has the potential for significant growth. The movement potential here is substantial, no doubt. The company itself is solid, I like it. There are risks, of course. Also, I'd like, as we can see, there's a sharp price increase that occurred in 2020, followed by a decline with some rebounds, and essentially this chart almost repeats itself. The question is, are we in a stage of depression? It's hard for me to say, but as we can see, this stage can last a very long time. Considering that in March 2020 we reached our lows, it seems like this could continue for actually several years, many years, but after that, the stock could continue to grow significantly. So again, if you have patience, if you don't rush and just hold, it's a good strategy. And I assume that sooner or later, maybe in 2025, maybe in 2026, this stock could bring very, very good profit. Also, I remind you that when I receive monetization on YouTube, I will open a new account completely from scratch and will fund it with the earnings from the channel. I'll show absolutely everything, how I build a portfolio, how I buy stocks. It will all be on real money. I'll show how I use strategies, how to hedge. We will definitely outperform the SP 500 index, and I'll also be releasing educational content in parallel, explaining why I buy certain stocks and not others. So subscribe not to miss the start of this experiment. Also, I've launched a poll on my channel about where the stock could go. Make sure to vote next month. We'll review the results in a month. Also, I advise you to watch my video where I talked about the most underrated stocks with great profit potential. Good luck to everyone.